recording, and away we go. And so exciting day in the market today, early day in the market. It is now 8:30 in the morning here in Hawaii, and so welcome to everybody from across the globe. We've got a couple of people from Ireland and a couple of people from the a few people from the East Coast, and so welcome. Thanks for joining us today as we wrap up another very interesting week in the market. And so let's get going. There we go. I remind everybody that all the materials that we do present are for training purposes only, and that traders should always paper trade any new method prior to the risk of their own personal capital. And that's one of the things, once you're introduced to something new in the market with respect to technical analysis or any of those kinds of things, try it out. Paper trade it first until you get used to it. There's an old adage that it typically takes about anywhere from 4 to 6 weeks to really get used to a new change, and so that's always a great idea to just do that, and then you get comfortable with it. Or if you want to, if you are one that likes to jump right in and start trading something, trade small. Trade small. So that was my disclaimer. Michael is not joining us today, and then Mike Traeger is not joining us today either, because Mike Traeger just got back from Poland, and so he's a little bit jet lagged, but he will be joining with us next week. And we've been missing Mike, and he had a great time over in Poland. And so I want to remind everybody that with the Active Trend Trader, I always like to provide training. Training is basically where you kind of set yourself, set a good foundation for what you want to be doing in the market. This past week we introduced some concepts about ebbs and flows in the market and how they continue to go on and on and on and repeat themselves over and over and over again. We also introduced the concept of the new trend candles, which is something that can be included, gotten off the Thinkorswim platform. If you are a Thinkorswim trader, I don't know if I don't think it's available on a lot of other platforms, but I know it is available there on Thinkorswim. So next week we're going to talk about always be sure about the trend. In other words, what can you do? What are some of the things you can utilize as visual indication of knowing you're on the trend, on the proper side of the trend. One of the things we did learn with the trend candles this past week is that when they change color, it typically means the trend is going to change. And just don't trade against the color of the candle. And that's a really great way to ensure that you're always on the proper side of the trend, because nothing feels any worse than getting into a trade and then being on the wrong side of it. So what's going on? We had the Fed meeting, was it this week? Yeah, it was this week. How quickly time flies. The reaction to the Fed was basically, it seemed like the institutions just kind of took a bite to see if they liked it and then started spitting it out very quickly, and that's where we saw continuing weakening in the market, even though the Fed had come out with basically some very dovish statements and that they're not going to raise interest rates until the economy picks up. But I'm just wondering, on one side, is is the data that they're basically looking at, because it has been changed over the years to include less measures, and that could be inflation, that could be the jobs report and all that kind of stuff. They've taken things out to make the numbers appear to be better than what they really are. And so I'm just wondering if some of that is coming home to roost, and the underlying energy in the market is really quite depleted. We have to remember that we have been in a fairly long-term bull market. We went into a topping pattern starting about mid 2014, didn't go very far in 2015, and has been kind of really flaky throughout 2016. So the question I have, with the S&P, it seems like it's searching for support. Will we see continued weakening into the summer? I don't know if you heard the alerts that just went off on my system, but that's telling me that buyers have probably come in and are supporting the fall of the S&P today and pushing prices back up. So we'll see if that's just a reaction to it being Triple Witching Friday, where they do rebalancing the portfolio, the indexes, and also future contracts have to roll forward, and also expiration of monthly contracts happen today, and we'll they close today, and then they finalize everything tomorrow. So NASDAQ also searching for support. Will it weaken for the summer? What's really interesting is the Russell actually has been holding up better than the other two indexes, and oftentimes the Russell is a lead indicator or a lead index, and so I'm just watching that very interesting, with a high level of interest, because will it work to hold up the other two indexes, or will the other two indexes pull it down, and then once it gets going down, you can sometimes really accelerate to the downside. So moving into the next few months, we've got the summer doldrums that tend to happen every summer, which leads to oftentimes to very volatile times to be trading. Brexit, which is the vote that comes up on the 23rd or 22nd or 23rd of, yeah, David, it is just about time to do that on TZA. David asked the question, is it time to get out of TZA? I'm going to stick with it through July 1st. I'm going to continue to sell the weekly covered calls on it. We'll see if how we will roll that into next week in just a little bit. So summer doldrums, Brexit, will Great Britain stay in the EU? What do you guys think? The bookies in Great Britain are taking bet on this to see, and last time I checked, the odds are in favor. Stay in. Okay. It's a slight favoring that they will exit. And then the big question, of course, I continue to have is the potential souring of the economy. If the internals of the economy are not as great, or not as good as what the Fed and the central banks want us to believe, will that eventually weigh on the market to the place where we get a pretty significant crunch? Economies around the world are not doing all that well, even though the central banks in each of the countries or each of the areas is trying to prop it up, keep it up as well as possible. This issue going in through the rest of the year, of course, becomes very interesting since this is an election year. The Fed, it is in there, they probably believe it's in their best interest to try to keep the market up as high as possible, because that favors their candidate. And so we'll see what transpires over the next few weeks and months. If the market takes a really bad dump and really crashes down and go retest some of the lows we had previously, or the pattern that we see on the long-term charts finally works its way out to the downside, that could put a very sour taste in a lot of people's mouths. So last time we met was on the 27th, a couple of weeks ago. The percentage of stocks above the 20-day moving average is working its way back up towards the 80 level. While we didn't get secondary indication, this turned out to be an opportunity to jump on a trade that could have, resulted in a nice little upside trade. However, where we're sitting today is we have basically, here's where we were about the 27th of last month, and then we pulled ourselves back up, hit the 85 level, and as we've said before, Mike and I do not use these upper levels as reasons to get short or anything like that. We just observe them. We are looking for the big extensions down to the downside to at least provide us initial alerts that the market's going to reverse. Right now, the market continues to work within just a confined, it's range bound basically. And so we pull back down almost to the 30 yesterday, and today the market is just kind of like stuck in neutral and not going a lot of places at all. One of the charts that I've started including in this is, you can see here, let me get this out of the way so I can see. Okay, 2 weeks ago, the percentage of stocks above the 200-day moving average was at 59, and you can see for the month of May it topped out and settled just above the 60 level, and then it's turned back over for the first 2 weeks in June. Will this accelerate, or is this just a retest, a pullback before it does in fact push higher? The price action on the spiders is still stuck in the price range, with the strong price range being down here about 190, and that also goes down to about 185, and then the upper range on that is approximately 200 to 210, and so it's it's been within that range now, if you can see, ever since midsection of 2014. It pulled up, dropped down, and again, these are the monthly. This is a monthly indicator, and so it does not, and it just basically registers and finalizes its tick at the end of every month, and therefore all the noise that was around wherever it settles for the month is not reflected on this chart. We have to go to either a daily or a weekly to see the exact extremes on the S&P or the spiders. But this, some technicians believe wherever you close is the most significant of the price action. That makes it the strongest, and so that's why we do pay attention to that, because as you can see here, we've got a very well defined resistance level that's a little bit down sloping, and a little bit of a support level that's a little bit up sloping, and so it's a very gradual kind of pennant type of thing going on, but it appears as if prices will continue to just, until it breaks out either one side or the other, will continue to bounce back and forth. And again, it overshoots sometimes, and it overshot earlier this year all the way down to about the 180 level, and it overshoots to the top up to about 113, 115. Anything to take action on here at this point? No. I mean, the action points are when it's up at the top of its range for looking at bearish trades, and when it's at the bottom of its range looking for bullish trades. One of the things, as I was looking and uploading the new data for today, as of about 9:30 this morning Pacific, that should be daylight savings time, not a lot of change in the market from last month. The NASDAQ, the NASDAQ composite is down considerably more than where it was last month, about 3% or so. But the Russell, as you can see, is just holding in there. This was a positive 1.06% up, and it's sitting at about 0.88 at this time. The Dow Jones and the S&P have fallen a little bit from last month, but not nearly as much as both the NASDAQ and the NASDAQ composite. Anybody trading Apple this morning? Apple got absolutely hammered, along with some of the other FANG stocks. Facebook held up okay, Netflix held up okay, but Amazon got hammered a little bit, and Google, just somebody reached in and ripped its guts out as it fell down to support of about 700. And so that was a very interesting events to be watching. On a yearly basis, or from the highs of last year, we can see that Russell is about the same distance away as it was last month. However, the composite of NASDAQ is appears to be accelerating down a little bit, and the Dow and the S&P are below their highs from last year. Let's go over and look at some charts. That's the one I want. Okay, yes it is. So as we can see here, this is the S&P. Daily on the left, weekly on the right. And as we see the price action, and I wrote about this in the, whoops, I don't want that. I wrote about this in last night's, the updates for the evening. I wrote about this a couple of times, and one is if we just draw a Fibonacci retracement on this, put that up down over here, and just take basically this low to this high here. As we see, the S&P is lingering right about this 50% retracement. It breached and fell all the way to the 100-day moving average yesterday, which also was at the extent of its Keltner channel, and then bounced back up. I was sitting on some training this past weekend, and one of the instructors was talking about, and one of the other traders was talking about how these Keltner channels can be quite powerful. I'd actually taken them off my charts for a while and was just going with the moving average channel. But he said that 80+%, about 80% of the price action of the entity that's being charted operates within that Keltner channel, and when it gets up towards the top of it, that is when it tends to be overextended, and you get at least a reaction. You remember from Wednesday night's training, you get your thrust up, then a reaction pullback to approximately, if the uptrend is strong, to the 20-day and it bounces from there, or the 8-day and it bounces from there. But as we can see, we have breached that now, but we also have a really good level right here at the, that's the 61% retracement there. And we see that that's where really strong support has come in, because we dropped it yesterday, bopped back above it, and now that's where exactly, almost to the penny, where the buyers came in today to support the price action. However, now that I've switched over to the trend candles. As you can see, the candles have turned to red, and so as long as they are red, what we want to be looking for is shorting opportunities or downtrend opportunities. So where is the ideal place for that? Well, the ideal place for that is basically when the price action gets up around either the resistance formed by the 38.2, or when it gets up back into the 8-day, 20-day moving average cluster. And we have had a cross on that, and so we've got a bearish cross on the 820, and as you can see, the 50-day, which is this yellow line, has started to tip over. And so we may get a surge into the close, but as long as these lines remain unbroken, it appears as if we are in a downtrend for a little bit longer. One of the things to notice also is both the TSI on a daily and the momentum on the daily chart appear to be as if they've bottomed and or are coming in to put a squeeze in. However, over here on the weekly chart, you can see we have a double top going on with the TSI, and the way we can utilize this for our benefit is if we draw just a straight parallel line across here at the bottom of this double top. If the action breaks through that, we'll see an acceleration in the selling to the downside. The momentum itself was really the clue on this, because if we draw a line straight up from here, approximately straight up, the momentum on this move up, the momentum started actually coming out of the move at about here, and that was, what week was that? That was the week of 4/11. So the momentum actually started coming out of the move. We get a pop-up, negative divergence, and now we're getting a little bit of a rollover. So we'll see if we push on up, because it is triple witching Friday, and stocks tend to have a little bit of a bias to the upside, or at least finishing even for the day on a triple witching Friday. And so that's what we may be looking forward to for today. Next week might be a completely different story. If we pop up just a little bit higher, and or pop up a little bit and then take out this the 50% retracement on the daily fib retracement, that may be an indication, okay, we're heading back down. Where's the next stop? Well, you've got support here at the 100, and then the next support is complete 100% retracement down to the 2025 level. So that's what we want to be ready for. Let's go over here and take a look at NDX. Okay, NDX has found support down here at the bottom of the Keltner channel, but it has dropped, which makes it weaker than the S&P. Has dropped, in fact, all of the major moving averages, and as you can see, the buyers are not coming back into this with as much vigor as it did into the S&P. And so we've got, it is down in this resistance zone that is formed by this congestion over here, and that support zone, excuse me, it will last down to about 4,300. If we live at a fib on this is hitting down about the 70% retracement level, and so definitely showing greater weakness, and you got a much stronger break, an earlier break on the 820 crossover. Had a real nice head and shoulders type pattern here on momentum here. Again, as it pushed up into the resistance zone formed by these highs over here, you can see we've got some nice negative divergence going on with this true strength indicator. The price action on the NASDAQ has not totally let go to the downside. But since the daily candles have turned to red, I want to be playing pullbacks up into this resistance level here. As you can see, the weekly candle has not turned red yet. As a matter of fact, it's blue. So is that indicative of a potential turn back the other way? We'll have to wait and see on that. So let's see, let me make sure I'm keeping up with the questions, and then the Russell. Okay, Russell, as you can see, the Russell is holding up as well, if not slightly better than the S&P. As you can see, we do not have a cross on the 820 day moving averages, and right now, at least for the time being, the 50-day moving average is acting as a level of support, which corresponds with the level of support from this swing high over back earlier in the year. Get that. What I've got is I've got the everybody's name up and I can't see the exact dates, and so that swing high was about the 10th of May. Similar thing, but the patterns, that's what I want, I want everybody to really catch up on that. The patterns themselves are not strong patterns. You've got kind of a double top thing going here. The momentum came up. Notice the negative divergence on the momentum on a weekly chart, which should be more significant than anything going on the daily chart, because the daily chart, basically what we could get is a little bit of a turn back up, even while and if the weeklies continue to roll over, and this is telling us that this will probably be very short-lived before it rolls back over also. What kind of a retracement are we looking like on the Russell? Well, look at that. It came right down to a 50% retracement, which was just above the 50-day moving average, has bounced back up, and this time the 20-day moving average is working as a resistance level, which also happens to be right at the 38.2% retracement. As I said, I'm looking today for things to kind of just close approximately where they are, and then that'll provide us some setups going into next week for taking trades either with the inverse index ETFs and or the puts on the actual indexes, index ETFs themselves. So we'll be watching that. One of the things I'll be doing over the weekend is I don't like to put out a lot of potential trades on either Thursday or Friday, because we're getting ready to go into the weekend review, which is sometimes more revealing. I do have a secondary source now for some of the stocks that are going to go onto the watch list. I think that the premium members are going to really like this, because it's going to open up some other additional opportunities for us with the strategy 1 type trades, and also for those who like to do the options, some more option opportunities in strategy number 2. Strategy number 3, we're just going to let it keep going as it has been going. So, okay, any questions on the what I'm seeing going on in the indexes, folks? As I say, I'm looking for this to kind of just hold on right there, I mean, it may sell off a little bit, but we'll see if the buyers can keep it up there towards the high side. Okay, let's make sure I erase everything. Gary, do you have a question? Okay. Dorothy, that's a really great question. Dorothy asked the question, if the Brits do vote to exit the EU, what could happen? I think you're going to get I think that the initial reaction to that would be very, very negative on the markets, and that may be a catalyst to send them lower. But I really haven't read a lot on whether that will be good and or bad. Someone was murdered over this, huh? No kidding, Gino. That's interesting. Gino says that somebody was actually murdered. A female. Wow. So it's going to be interesting, and we as traders, like I don't want to be callous towards the lady who lost her life or anything, but those of us that are trading, we just need to be aware of where's support, where's resistance if this happens, and not necessarily trade the news, but wait for the reaction after the news is out. British MP was murdered over her support for staying in the EU. Wow, interesting. Very interesting. Let me see where I can put this where I can see both. So let's roll through the rest of what we got to cover, and then we'll take a look at some stocks. I've actually updated this and sent this chart out in one of the weekend trader reports and or the free report that I send out. So we are still under the dome, but the dome is kind of starting to turn into a flat roof, if you will. As we watch what's going on, we're still stuck in that resistance level, stuck in this resistance zone up here. One thing that I did notice as I was watching and going through this is, well, come on, is that on the profit charts on Thinkorswim, you can actually put up a quarterly chart, and this crossover on the MACD has actually started to broaden just a little bit. And so, isn't it kind of funny? We didn't have the central bank, so much of the central bank interference back in 2008, almost none back in 2000 when the market rolled over. A lot of interaction by the central banks has really retarded this rollover. So in one way, if one believes in the central banking system, up until this point they have muted what's going on here and basically kept it in line within these levels. Now are the big question that we all have to ask ourselves, and we'll see it work out on the charts, is are the things they're doing to kind of prop up and keep the market operating in this range, longer term, will they be are they good for the health of the market? And I think arguments can be made on both sides. One of my arguments to a more or less a crash type scenario is one of the ways that they're propping up the market is by increasing the debt. Well, at some point, debt will become such a burden and a weight that by itself that would take the market down. And then the other side of that argument are those who say, well, they basically come around saying, well, the economies of the world are improving, and just look at the data. The one thing that I don't like about that argument is that we all know that the data is skewed from what it used to be. So what is it really measuring? Let's see. If it falls below 2 days low backlog, Gary has a question, level in the rut, does that mean we can take negative trades? Right now, Gary, I would be looking at taking negative trades on either the S&P and or the NASDAQ because they're showing the earlier signs of cracking and getting weak. And so I'd be looking for those pullbacks up into the short-term moving averages, or in other words, the reaction move back up to look for a trade back down. The Russell needs to show just a little bit more weakness, and clearly if it does take out the 50-day moving average and get a close below it, that might set us up to be able to look then for downside trades on either the Russell, the IWM, or TZA. We'll see what transpires. moving along. So what's path of least resistance as of right now? Ultimately, I think that the path of least resistance is, in fact, this way. But we may get a little tick up, as we saw the other, if you were with us for the training on Wednesday night, and if you're a premium member and have not seen that training, I think it is just really dynamite training. Go take a look at it. I think it will improve your timing of entries into trades. But what are we seeing on the S&P and then the index? We're seeing a thrust down, and all of a sudden now we're getting that reaction up. And so we're waiting now for the reaction up to a certain level for the next thrust down. And I think this is what we're starting to see. And it may fool us. It may just basically go, nope, I've thrusted down enough. I'm come back down here to this level, and I'm going to rebound up. That's one of the things that's made this market really challenging to predict, because in some cases it hasn't been following the standard patterns. But as we talked about that sideways trend on Wednesday night, we could also see the market just basically do something like this. So pretend those are parallel, and we see the market just kind of bounce around in between those areas. And so we want to be observing. That's why I've said in many of the after-hour reports, wait for resistance and then wait for support. And if if it overshoots support a little bit and comes back up through it, there's some triggers for you. And sometimes those triggers are not evident except on the intraday charts. Okay. We're out traveling. I got hit with a, had moved up my stop on the 6 trade and took a small 2.5% loss on that. As you can see, strategy 1, it's, we haven't had a lot of openings to get in on strategy 1. So we've had some of these, smaller losses. They've all been small losses. Strategy 2, much better. And of course, strategy 3, I actually added to my position on Tesla to be able to sell more premium in strategy 3. All the trades on strategy 3 this week were, in fact, very profitable. We made our objective. Between now and the end of the month, my objective is very simple. I want to close this gap. This gap is approximately a little bit over $4,000. I want to get my equity curve back in line with this 40% curve. That is just the benchmark for my yearly performance. And that's my objective over the next 2 weeks, is to go, to get this back in line with where we'll be sitting at about, and this is about the $20,000 mark. That's what I'd like to have in profits by the end of June. Okay. Of course, a lot of you guys know that I like to do this trade, this covered call. It's the strategy number 3. It's basically selling premium against LEAP options that we own. One of the things I've gotten I've got a couple of emails from folks who are concerned about, one, the value of your initial investment, the investment on the buying the LEAPs. Yes, it will go down over time as you move closer to expiration. However, we want to be selling enough premium each week and collecting enough premium that we pay for how much it goes down, along with the profit that we're shooting for. Now in this case, I'm shooting for a profit of 100%. At this point, taking into consideration the drop in the value of my long call and put on Tesla, we have collected enough premium so that now my net gain, if I was to sell out everything right now, my profit on this half of the Tesla trade, because I did add the 2 new positions, would be about 68%. As soon as that gets to $9,000 here, if it gets there before the end of before we hit January this year, I will close this position out because I will have met my objective of paying for the underlying plus making 100%. And so that's my plan going forward. I added to the Tesla trade because I wanted to start bringing in closer to $500 clear after I paying for the, I wanted to bring home in about $500 a week clear of the rest of it. So currently I have about $19,000 invested. No, it's about it's $14,900 invested in all 4 contracts of Tesla that I have that I trade against every week. The other thing that item that I've seen from folks is when I send out the alert, a lot of times, sometimes they are very quick and you have to be really ready to jump on the trade. Well, oftentimes if you'll just wait and go ahead and put the order in, the market moves around enough, especially Tesla, where you'll get filled sometime during the day. And if you don't get filled, then drop me an email and say, okay, how can I reposition this or recalculate what I can do so I can still bring in the necessary revenue per week to basically cover my initial cost plus the profit projection that I have. And the next reason why I see folks that are they're kind of losing on this trade is because they are trying to treat it like a old-fashioned covered call, and they're going way out of the money. And so what turns out is they're making money on the calls and puts they're selling, but they're so far out of the money, the premium they collect doesn't cover their cost and plus a profit. And so that's 2 of the things. With that being said, what I'm going to be doing is I'm putting together a training on how to do strategy number 3. I had a nice phone call with a gentleman yesterday about how to do this and worked it out. I hope that led to better understanding of how to handle this particular trade. And I see he's online. Did that help a little bit? So presentations going into the future. Okay, monthly BAM meetings. For the month of July, we're going to be doing 2 webinars rather than a in-person meeting. Then I will be back from Hawaii towards the end of July, and then I'll be spending 3 months on the mainland, and we'll be back to doing our regular first of the month BAM meetings during that time frame. We're going to be talking more about these trend candles on Wednesday night and how to utilize those to make sure you are on the proper side of the trade. Oh, great. I'm glad that helped. It was also very educational for me, Bob, to be able to work through that. Train on how to do strategy 3 and do it the correct way. And then, hey, I'm going to be driving around the countryside. My wife and I are going to take a tour of the United States in August, and we'll be on the road for a month, but I'll be working from the road and reporting, because as long as I have my laptop, my hotspot, and a converter that plugs into they don't call them cigarette lighters anymore, do they? What are they called now? It's the place you connect so you can charge your phone. The outlet, I guess, what they call it. Jacks, there you go. So I'll be working from the road, and my wife and I are really looking forward to that. We've never, when I was in the military, we would get our orders, we'd drive cross country, but we had to be somewhere really fast, and so we didn't really get to enjoy the countryside. So this time we're going to be doing that. Okay, yeah, where's DW today? Yeah, that'd be a good contest. One of the other contests my wife wants me to put together, you guys tell me what you think of that. She goes, I want you to trade Tesla so she can buy a new Lexus. And I've gone, that's pretty good. And so I'm putting some finishing touches on the thoughts about that. But so if you are out there and you know, even I'm just passing through and you want to have a cup of coffee or something like that, let me know. And if you're close to our trek, I'd be glad to sit down and just meet you face to face. And if you wonder why we moved back to our house in Hawaii, it's because from my back lanai, that's what they call kind of the porch or the patio, this is what I look down on. I would like to say every morning when I wake up, but since I'm getting up now at 3 o'clock to trade the market, this is dark because I see these lights down here. But yeah, great place to live. We lived here for 14 years before, and in this house, and it was just time to come back home. You know how that goes. So it's on the island of Oahu, up in a place called Makakilo City or Kapolei on the city on the island of Oahu. We're up about 800 feet above the ocean, and right now it's raining, so it's like I'm in Seattle. It's about 72 degrees. Feast on pig and chocolate, yeah. So, want to remind everyone with the active trend trading, I try to focus on 5 pillars. What to trade. We trade high quality IBD growth stocks and index ETFs. When to enter, when to exit, and what strategies we're going to be using, and what to expect. You've seen this before. I'm a firm believer in, and I heard this reiterated this past weekend. It said, don't fall in love with a stock or an entity. Fall in love with the setup. And when they talk about setup, they're talking about the system. Fall in love with the system, and then you apply your strategies to that. And I think that that is very wise advice. So that's it for today for this piece. I want to thank you for joining us. You know, see you next week. Have a great weekend. Keep growing the egg, and you know, kind of keep a stiff upper lip, because it takes a while to learn how to trade, but you will catch on as long as you remain diligent and looking to trade wisely and profitably. So with that, let's jump over here and take a look at some stock. So any of you who are on the any of you guys who were on the call on oh gosh, Wednesday night, have you had a chance to experiment with these? Because I sent out the link that would allow you to download this setup for the trend candles. Have you been able to play with that a little bit? Oahu, O-A-H-U. Okay, I got a couple of questions. One was from Tracy about how I would set up, what time we got? Yeah, I got plenty of time. How I would set up working the trade for TZA going into the next week. What I might do, where is TZA? TZA is sitting at about 73, so I'd throw, is that correct? Yeah, 37.72. And last week I had sold the 37s for about 73 cents. And so I'd be taking a look here at this is the daily chart. I would probably want to flip over and take a look at the hourly chart also, Tracy, just to see, okay, what does it look like it's doing? Well, it looks from this point right here, it looks like we may be getting, a little bit extended. It's up against the resistance area. And so what I could be looking at doing is, okay, I could roll that out to the $38 call for next week. I'll be break even for last week, and so what would that look like? I would be basically TZA, and for next week, as you can see, I've already been looking at this. Next week, the 38s are going for $1.34 by $1.35. So you're going to be able to sell that for about $1.35 to $1.39. So I'd look at selling that one, or if you expect the if you expect that it's going to continue to go up because it has an expected move on TZA of about $3 between now, plus or minus $3 for next week. So if we go, that puts you up to a little bit over 40. So how much is the 40? If you want to be really safe on this, you could go up here to the $40, and right now you can pick up about 81 cents on the 40. So that's another option for selling. I would, because the intraday charts look like they might want to, sell off a little bit. I'm getting a little bit of a red to a blue candle at a resistance area. I might just go, hey, just to the top of the Keltner channels and sell the 3850s. And how much for the 3850s today? Right now, you get $1.16 to $1.27, about let's say round it off to $1.20. So I hope that helps, gives a picture of how I evaluate those. And I do something similar with the strategy number 3, but with strategy number 3, I'm also have to take into consideration I want to cover the expense of buying the long positions plus the profit that I want on top of that. Kieran, the link for that went out when I announced it with the alert, with the email that gave the link to the training session. But I'll be able to, I saw your email earlier, I'll be glad to send it to you. Well, if you have that's a great question. Tracy asked if you have 200 contracts, or 2 contracts or 200 shares, would I sell 2 contracts? I would, but the luxury of having the 200 shares, what it allows you to do is, one, you could go, okay, I'm going to go out a little bit further out of the money. I might go up here to the 39, sell 1 there, and fall back down here to the 38 or to 37.50 and sell 1 there. And that way, if it does turn to run higher, you'll get, this will be closer to being, it'll be slightly in the money, but the other one will have still an opportunity to fall off. So you have the opportunity to do 2 different trades there. Does that help? Okay, time-wise, we're looking good. Let me get into some of these. So let me get into some of these. Dorothy asked a question on NetEase. I thought it was going to go up from a cup and handle pattern, but on Wednesday's webinar, you have NetEase to go down and to short it. What am I missing in the clues? Dorothy, I don't know. Let's find out. And so I want to be able to see where I can. So you're absolutely right. Here's the daily chart over here. Let me get rid of the drawing. So yes, you do have this cup thing. You do have this cup thing going on here. It's come back up and has kind of started to go into kind of a handle, but it's kind of a fast dropping handle, if you will. The other thing I'm looking at is that. The other thing I'm looking at on the Thinkorswim, the True Strength, weakness on the momentum, and it's not just not weakness. It's not just a mild little pullback, because here's another kind of quasi cup and handle here that's following a pretty significant steady uptrend. This was this was a short-lived uptrend, and so a little bit less of a pullback, but you can watch that. But to me, what it looks like it's doing is it looks like it's putting in a flag type pattern where here's the start of the flagpole, here's the flag, and eventually it's going to break out of that and run about this same equidistance down, which would put it down about 145. And I can give you a more precise amount on that. If that's the top of my flagpole, that's where I start my flag. And let's say I have this and that's the bottom of the flag. You just take this and activate it, and here's your measured move. Not too bad doing it by eyeball. So down about 145, which is close to where you have support before. So I'd be looking at, again, taking a look at my red candles. I've turned red on increasing volume. What am I looking for? I'm looking for that first reaction down, or first thrust down, reaction back up to resistance, and then a thrust down. You may see that one again for the short covering. Now, if some of you are wondering about what these arrows are here, you have to tune in on Wednesday's training session, and we'll go over what those specifically are also. Let's see, ABX. Okay, who that? That was Geno's. Okay, Geno, if you take a look at ABX, it's got it's been in a really nice little uptrend here, and utilizing these trend candles, what we're looking at is for once it turns blue, we're looking for any kind of pullback to the either the 8 or the 20-day moving average, any combo. And then a rebound from that. We're getting a muted rebound today, but that's also because the market has been down. I'd be a little bit concerned on a longer term chart, simply because I'm trying to put the comments page where I can see both the charts. I'd be a little bit concerned on the longer term charts, Geno, because look what we're up against right here. We're right back into a level of long-term resistance. And on a weekly basis, we're getting a bearish kind of candle, or at least a doji at resistance, which may mean that it's time to get a little bit more of a reaction back down to the downside. And this is not looking really good either. Those are negative divergences. So, okay, couple more, LGIH, and then Toll, and then I've got to call it a day from there, guys. Yeah, LGI, it looks kind of, let me get rid of, as Dorothy was talking about, there's a nice little cup handle, and it's just about ready to break out of that handle. The candlesticks have turned from blue down here, and so at this point we get our first thrust up, We get your pullback. We just had another breakout. Is it worth buying it right here, or do you want to wait for another comeback? It has hit resistance at about the 30 level. If we maintain a level of symmetry in the pushes, because here is your thrust from here, well darn, from here to here is your thrust. If we move that, activate it, and move it over here, as you can see, we've already hit the high of that thrust. Now there was another thrust that is kind of here, starting here and moving all the way up to here. You can take, if you want to consider that your first thrust, and this was the reaction, then you can extend it to that to see, for an idea of how far it may go. And I'll bet you that it goes up here into the 36 area. Does that help, Gino? And Toll Brothers real quick. I think that's Toll. It is Toll Brothers. Okay, downtrend. Try to put in a higher low, which it did do. However, it is really struggling and not able to put in a higher high at this point. And so what this may turn out to be down here, Gino, is just a consolidation area, and watch for it to go thrust down, react up, thrust down, react up. And then basically, if you're going to be trading this, I'd be looking at, it needs to push on up through this resistance area. So, and then play the pullback, or wait for it to pull back down in here and see if this support holds, if I was going to be looking to get long. Do we need to email you regarding your new chart information for TOS? Yeah, Barbara, I sent out that connection or that setting to be able to download. I sent that out when I sent the notification that the recording was uploaded for the training last Wednesday night. But I'll be glad to send that out again, or if you want to make sure you get it, feel free to send me an email. IBB, last one, because I really got to close out some positions before. Okay, great pattern. Who was IBB? Gary, because this shows very clearly what we were talking about the other night, where we get these thrusts. Here's your first thrust down. Here's your reaction up. Second thrust down, reaction up, and now what are we going into? That consolidation pattern that we saw, so which may either lead to a new uptrend, or it may lead to a continuation of the downtrend. But from once you move into this sideways move, you're looking at here to trade up, there to trade down, and look at that. That's a pretty significant amount of, the distance from here, from about here to there, you're looking at a $39 difference. So, okay, folks, I'm going to call that a day. I've got to close out some positions before they get assigned to me, and we'll be chatting with you next time. The recording will be up sometime this evening. So, have a great weekend, and God bless everybody.